Hello and welcome to Moving Iron Podcast. This edition of the Moving Iron Podcast is brought to you by these great sponsors. Axon started out of a passion for keeping agriculture moving. Imagine having 100 years of tire and wheel knowledge in your back pocket the next time you sell a piece of ag equipment. To find more or become an Axon dealer, please visit agmarkets.com. This podcast is also brought to you by Valley Transportation. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransinc.com for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is also brought to you by Ag Direct. No matter how you buy your ag equipment, from a dealer, auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.
Moving higher in the 21st century. Hard-working people working hard for you and me. Moving higher time and time again. Through the years you'll find us here. Moving higher.
Hello and welcome to Moving Iron Podcast. Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire is giving away some free stuff again this month, Shawn. You can get yourself a free digital tire pressure gauge and a Firestone T-shirt. I mean, I'll tell you what, I'm jacked. I'm getting mine. Already got one lined up. I don't know if you send multiple emails, you get multiple ones, but if you do, send an email to marketing@axontire.com, and they will send you out a free digital tire pressure gauge and a Firestone T-shirt. So take advantage of this by going to marketing@axontire.com. Send them all your details and tell them Moving Iron Podcast sent you. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, from a dealer, an auction, or a private party, Ag Direct can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Well, Shawn, yesterday was one of the first down days we've had in a little while in the grains. Obviously, it was profit taking. Everyone kind of checking their profit and moving forward. But I guess looks like today things have kind of started out down a little bit, but I'm sure it's the same scenario. So I guess as you take a look at the action so far this week, what are your thoughts?
Well, I think the corn market fully has now reacted to the planting intention surprise. And I think the wheat market has correctly readjusted to the conditions report. Like I said, somehow the market was surprised, but whatever it was, I think that they've moved those markets to where they think they need to be right now. And we're looking at the weather. Here in April, one of our long-standing forecasts was for a late-ending winter, pretty cold, and it's really shaping up to be that way. We're really getting big-time cold verification throughout a predominance of the remaining part of the month. Feet of snow out west, a lot of snow that's coming in the northern plains, north of you, unfortunately, but just some cold weather and a lot of wet weather in the eastern corn belt. Just means we're not going to get this crop going timely. We're going to be slow. We're going to be delayed. It's going to be planted in less than ideal conditions, and the biggest problem is going to be the cold soil temperatures, and especially for planting corn. It's going to be difficult. And so at a time that the market was already worried over 89.5 million acres, delayed planting is not what the market wants to try to get some of those acres back. And so I just think the way this month is setting out, it's going to be pretty hard for at least the corn market, to correct substantially, unless there's something going on with Russia where they say they love each other again and they're ready to rock and roll. But absent a geopolitical ceasefire, pretty hard to see corn prices correcting much with this kind of an overall planting outlook for the month of April. Just does not look good for getting corn planted early. So
yeah. All right. Yeah. So yesterday, all the oil executives got drug up on the Capitol Hill to talk about, if they're gouging customers or not, and it's nothing they're doing. It's just the market, obviously. and you have a major pipeline, a major line of oil that's no longer being put out to the world. So obviously that's going to have some issues there. Take a look at oil right now, Shawn. What are your thoughts there?
Look, the oil comes had nothing to do with what the price of oil. Price of oil is set by international price.
Yeah.
I mean, it's a national market. So What are they going to do? Right now they're pumping as much as they can, but they have been told for a long while that, we don't want you. We want you to stop doing what you're doing. And so they did.
Right.
And so now everyone is demanding that they produce more crude oil.
Yeah.
And they go, sure. But A, it'll take several years to do it. And B, are you going to give us any guarantees that you're not going to come after us when things calm down and say that we're pariah again? I mean, and that's the problem. The problem is, after being beaten up for the last 2 years, saying that they were ruining the world, now we want them to save the world. It doesn't work that way. These are long-term investments, and they simply cannot turn the spigots on. Even Iran or Venezuela, that we're trying to get cozy with again to try to get some more production. But they haven't invested in their oil fields for a decade. So there's no way around this short term. And I don't know how quickly it's going to take for the oil companies to really start going after it. I mean, they are very profitable, but I still think they're going to be very cautious, Casey. I don't think they want to put a bunch of money out there. And then when these wells are ready to be put online 5 years from now, that the government's telling them, no, we don't want it now. Goodbye. I think they're just really scared to death about that. So the problem is that's the problem. And it does, outside of really incredible poor economic conditions that slows demand down, I really think, we're in an elevated energy price environment for a while until either, the administration changes their view and helps promote the industry, or we over time just find, more nuclear energy or, hydrogen fuels. I mean, there's a lot of things, but that's down the road. I think we're stuck with high energy prices for a while. Yeah. I just don't see it going away.
No, not the current situation that we're in. I mean, it's a supply and demand thing, right? So we have lots of demand and not very much supply, so prices go up.
Sure. If there's we love you in Russia and Ukraine again, and things really calm down there, that probably would give your best opportunity for a short-term hit in the crude oil market. But how long that would last if it occurred, it probably wouldn't really be anything other than a short-term Band-Aid within a long-term conflict.
Yep.
So
okay. All right, so let's jump over here. Let's talk about your last report that came out. You were talking about natural gas. Obviously, natural gas is still high. There's still a lot of issues there, especially with the Ukraine-Russia issue. As much natural gas that comes out of that area into Europe, you had countries like Lithuania, I think, that said they were going to turn off the Russian gas and start looking at other places for liquid natural gas to come in. So obviously from the U.S. is probably where that's going to mostly come from. I guess as you look at that situation there, what are your thoughts there, and has your opinion changed on natural gas?
No, we've been bullish natural gas for a while, and one of the bullish reasons was that we thought we'd have a late ending winter. We are getting that right now. April is set up to be one of the top 2 coldest over the last 30 years, which means we're going to have a drawdown in the month of April, which we almost never have. We almost always start rebuilding, so we're missing an entire month of rebuilding already well below normal 5-year average storage natural gas stocks. And so when you're looking out ahead, Casey, to what you just mentioned about the Europeans looking to buy as much LNG from us as they possibly can to kind of reduce their overall market share with Russia, and given that it just so happens that our capacity, the way it was invested, that 35% more capacity to sell LNG as we move into next winter, we got to be really careful about what are our natural gas storage stocks going to be next October. If we're selling 35% more in exports and we miss an entire month increase cycle here in April, and we're already substantially below normal. I mean, we really need to do something to tell those natural gas guys, put some money to work. get those fracking wells going. I think they already went after the low-lying fruit, that they could easily get to, but that's over. And, if they're going to really increase production substantially from here, they're going to have to put some bigger money out there, just like crude oil. They've been told, they're not really wanted. And so I'm not smart enough, Casey, to know what the price is ultimately that would make them want to do that. But I'm not sure we're there yet. And so right now we're in the low to mid sixes on natural gas prices, and still a complete giveaway compared to what the rest of the world is dealing with.
Right. Yeah.
But I really think we need to price this market substantially higher into the fall to give the right price signal so that by the time we get to October, November, December, we're getting a new ramping up of natural gas production, and we can't wait to the fall to do that. We need to really goose this price up now. And I don't mean, and I think you almost have to overprice it, Casey. Mm-hmm. So let's just say under normal circumstances, 6 to 7 would absolutely get the job done. In this environment where you're a pariah if you're in fossil fuel industry, it might mean 8 to 10 is what is going to be enough to finally get those guys to say, we can't pass this one up. We're going to have to just bite the bullet and go after it and make sure we get some long-term hedges on the futures market. You know what I'm saying?
Yeah, no, I hear you. It's a weird scenario when everyone's telling you that they hate your guts, and then all of a sudden we hate your guts, but we sure need your help. It's kind of talking out of both sides of your mouth doesn't work very well.
No, it doesn't.
Doesn't promote confidence by any means. All right, let's jump over and talk about cotton a little bit. Cotton is had an incredible run up. Right now it's $1.35 right now, down just a little bit from what it started from the open. But, man, I guess as you look at cotton, Shawn, there's a lot of factors there that are pointing that there should be some movement down, but there is a lot of movement up right now.
Well, demand destruction is absolutely starting to show up. Mm-hmm. I think we've finally gotten to a level where we're starting to see the wheel slowing down. The problem is West Texas, like Nebraska, mm-hmm. I do not think they've had a traceable rain event and I don't think they've had a drop of rain in like
2 decades.
Months.
Yeah, it's been a while.
3 decades.
Yeah.
I mean, but it's on the top, 1 or 2 driest 3-month periods that we've seen there. And, 3 million acres of cotton are produced there. And so, there's still time, but, if we're going to get into late June and we don't have any rainfall, Casey, that 3 million acres comes off the top, and, that's just not going to be what the market's going to want. And so right now, that's what's keeping this market up, despite signs of the demand destruction that we're talking about. Everyone is just looking at now. Of course, you get one of these rains that come out of nowhere, and it's $1 billion rain, and all of a sudden you could go limit down. But we're not seeing any signs yet that that's happening, or that it's about to happen. And so that means elevated cotton price until that happens, or potentially even one more escalation higher if it looks like that whole region is going to be a zero, which it can be. It could be a zero. Yeah. We'll just need that much more demand destruction to pull it off. So it's really a situation of U.S. West Texas weather at this point that's going to be the primary driver here. And obviously the market will be watching every weather map to see if there's anything that's going to happen. You don't need a lot of rainfall. I mean, cotton is a dry weather crop. It just, but you can't have zero. I mean, give yourself a good half inch, 3/4 inch of rain in, that West Texas region, and boy, that you would really kick the can down the road to better prospects. But, right now ain't happening.
Yeah.
So.
Okay. Yeah, it's been dry. It's dry here. It's dry west or east Colorado, western Kansas, Panhandle of Oklahoma, West Texas Panhandle. It's just been that whole corridor down there's just been.
Yeah, that box right there has missed everything. Now they had some moisture to the west of there. Mm-hmm. We've had plenty of moisture to the east of there, but that box there it's just missed. It's missed everything.
Yeah. So. And you throw 70-mile-an-hour winds on top of that, and the ground stays, no dust flies or anything when it's dry like that. So it's great. It's the best thing ever. So we had 70-plus mile-an-hour winds here yesterday, and 50 and 60 mile-an-hour winds the 2 days prior to that. So it's been crazy windy, and I think today is supposed to be the last day of the incredible wind, and then it's like 80 degrees on Saturday or something like that. But we do have some chances for precipitation early next week, so hopefully, knock on wood, we can get some of that. Get some of that to come through here. All right, so you went to Brazil in October, right?
Yes.
And checked out what was going on down there, and I guess since then we've talked of coffee a little bit, but nothing in depth for quite some time. So, what's happened in the coffee market right now, and where do you see that headed?
Well, the coffee market, was the second best performing ag market last year, and it's been resting pretty much this year. It's been kind of got caught in a trading range as the market is trying to determine if this Russia thing is going to cause some demand destruction, enough demand destruction to allow the market to get to the 2023 harvest, not this harvest, but the 2023 harvest. And so it's kept the market kind of feeling it's done enough for now. We don't think it's done enough for now, but the problem is harvest is coming. They start harvesting Robusta in May and Arabica in June. And, most markets, as you approach harvest, regardless of how bullish the fundamentals are, there tends to be a period of some retrenchment. So sure. I think the market is just sitting there saying, maybe right now we don't need to do anything. I'm not sure that's true, but the market's feeling comfortable right now that it can wait it out, sit it out, and see what happens. Unless we get some more, weather problems along the way. But I think the coffee market is just waiting for a catalyst to move higher, and it just hasn't found it right now. So it's a market that's just quietly going sideways. Ultimately, we think it does need to go higher, but it may require post-harvest before we see that happen.
Right on.
So
okay, that makes sense. All right, so let's spend a little time here. The last few minutes of the podcast here. Let's spend some time talking about soybean oil, palm oil, various vegetable oils, those kind of things, and what that market looks like, because there is such a pinch right now on sunflower oil coming out of the Black Sea region.
Well, when you look at all vegetable oils on a stocks to usage ratio, I think we're at 35-year lows in that ratio. We just don't have a lot. We had some weather problems in the Palm Beach areas that created problems over there. Argentina has temporarily halted export certificates while they wait to increase their export taxes. And that's put fear into the marketplace. But the real issue is will global governments continue to support renewable diesel from vegetable oils, or will they kick the can down and say we need to push that off for now because we need to keep this, the vegetable oil for human consumption, not for energy production. And I think ultimately that's the $1 billion question here of what's going to happen is, will that support go away? If it does go away, then we might be set up for a significant correction in the vegetable oil market. I don't have any clarity or any insight or any edge on what governments are going to do or not do, but I do believe when push comes to shove, they will choose food over fuel. Throughout history, they've always done that. So the other thing that I thought was interesting, Casey, Yellen was speaking, I don't know if it was yesterday or day before, and she said that if China goes into Taiwan, that the U.S. would do the same thing to them as we're doing to Russia right now. We would sanction them. We would freeze their funds off. We would halt trading with them. It's pretty much what she said. We talked about this a week or two ago. She actually said it. So
is it a signal, Shawn?
Well, China is going to go into Taiwan.
Right.
We can argue Russia was going to go into Ukraine. We could argue it was 6 months from now or not. It turned out to be when it was, but China is going to do it. They're going to do it. So what does it mean? What does it mean if we cut off China demand for U.S. agriculture?
It's a big deal.
Short term. If you think of this out loud, if China loses our supply, right, mm-hmm. they would go and buy everything they could from everybody else. And everybody else that would buy their supplies from everybody else would have to buy it from us. So ultimately, it would eventually work itself out. But remember, the way that our just-in-time ag system is set up, everything is exported and moved in the way that's most efficient.
Right.
That's best. So it doesn't mean that we couldn't find someone else to eventually buy our stuff, but there would be a period of chaos. And I mean, you could see the grain market specifically like crash.
Yeah.
I mean, for a while, if you say, man, we're not allowing corn exports to China. We're not allowing soybean. I mean, if you just said to the market, regardless if eventually we would find someone else to buy it, we would. But there could be a dislocation period of 3 months where we are in really chaotic demand destruction period in that kind of a scenario. And to hear Yellen publicly say this, I mean, that's what they're going to do, Casey. They're telling you that's what they're going to do. And so I think everyone who's very bullish to grain markets, and I'm not saying that it's not justified. I get it. But be very careful. You know, we're in a very, very volatile situation. A lot of things can happen, but you do need to plan for a lot of different pathways here. And if tomorrow morning we woke up and China invaded Taiwan and the Biden administration said, we're sanctioning China and we're cutting off exports to them, I don't think you would want to not have some price protection on or have a lot of cash sales on. I think you need to really think about the risks that you're taking on the farm and say, you know, what do I really want to do here? And I continue to believe that too many farmers right now are not considering that other side of what could happen here. And so I would really, because you don't want to wake up as a farmer saying, I didn't make any sales. What am I supposed to do? I'm limit down. My elevator is now giving me, you know, a cash bid way below even limit down. You don't want to be trying to cash sell your grain in that environment because you're not going to get it done. I just really want to emphasize that there is some big bearish black swans out there that farmers really need to take seriously, and make sure that they have enough protection that if it occurs, they're still a profitable farmer going forward. I really think this is not a time to get complacent.
Yeah.
So,
I never thought of it like that, Shawn. That's a good point that you made there. So, good stuff to think about. And if folks want to reach out to you and get more information about how you're thinking about this particular subject right here, what's the best way to do that?
The website is Hackett, HACKETT, advisors.com. Lots of information on there. Talks about what we do to see if we can be of value.
Yeah. Check that out, folks. Shawn's got a ton of information. His newsletter is next to none. I mean, make sure you reach out to Shawn and talk to him about what he's got going on there. So, Shawn, appreciate you being on the podcast, man. Thanks, Casey. I really appreciate being on the show. Yeah, I love you being on there too. So, and I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram. That's where you find the latest editions of the Moving Iron Podcast. Also, go to MovingIronLLC.com. That's where you find everything Moving Iron related. The Moving Iron Summit's coming up here in Nashville, Tennessee. That's September 6th, 7th, and 8th at the downtown Hilton in Nashville. If you're interested in checking that out, if you're a dealer of any kind, doesn't matter what kind of dealer you are. If you're interested in doing that, check that out on the website there, or send me an email at movingiron.summit@movingironllc.com, and I will make sure to get you whatever information you might need. So with that, I am Casey Seymour, Shawn Hackett. Let's go move some iron, folks. Out. Axon Tire is going to have more tips, tricks, and client advice throughout the year, and in September at the Moving Iron Summit in Nashville. If you're looking to sign up for the event, please head over to MovingIronLLC.com. We hope to see you there. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 or go to valleytransitinc.com for all of your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy ag equipment from a dealer, auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com.